Pezesha is a capital enabler platform that ultimately summarizes what it means. We're a digital financial ecosystem that connects small underserved businesses to affordable capital. My name is Hilda. I am the CEO and founder of Pezesha. So basically, what do? We take a collaborative approach where we tackle the $328 billion financing gap for small and medium businesses across Sub Saharan Africa. This is a $19 billion financing gap in Kenya alone, where we started, that translates to more than 8 million businesses in Kenya that have been underserved. Across Sub Saharan Africa, we're talking of more than 50 million of such businesses that have been excluded and underserved. These businesses are creating more than 70% of jobs across Sub-Saharan Africa. This ultimately aligns with our long-term vision as we continue to deepen the local capital markets. Next slide. So Pezesha is not a lender. We are a value chain enabler platform that basically connects investors who include bank, microfinance institutions, and other retail lenders on one side. On the other side, we connect them with quality, credit-worthy merchants. Through our partnership with suppliers, we're able to access real-time complete supply chain data to then provide alternative credit scores and affordable working capital to their merchants. At the same time, educating these merchants on how they can be able to grow their credit score to be positive by transacting through digital platforms that help them to basically build a digital presence, and in the end, being able to grow up the formal financial ladder. As you can see, we're charging a 5% interest rate to these merchants every time they borrow from our platform. And out of this 5%, Pezesha takes a 20% facilitation fee, and the lender takes 80% of that fee because they are the ones who bear the risk. In the end, everyone benefits in our value chain ecosystem. The lender, which is the investor, the banks, and the microfinance institutions, they're able to optimize their capital for a productive purpose, which is buying inventory, where the merchant basically uses the funds. On the other side, the suppliers who we partner with, they're able to increase their network of merchants and at the same time, retain them because of the credit offering. The merchant is able to grow their inventory and customers at the same time. For Pezesha, what do we gain out of this process? We're able to impact more small businesses because of our network effect to partner with everyone in the value chain. One of those businesses that we have supported and impacted so far is the story of Mary that continues to inspire us up to date to continue with the mission of supporting small businesses. Mary started with a $1,000 credit to buy inventory on our platform, and using her 12 months history of data from her supplier, we were able to give her a credit score and empower her with digital tools, financial education, to be able to learn how to build a positive credit score. Over time, within a period of 2 to 3 months, she was able to grow her credit score to a level that she was able to qualify for a $3,000 credit, which is higher than she got in the first time. With that, she was then able to grow up the Pezesha ladder, create income 5 times more than she had when we funded her. She was able to grow her revenue to 20%, increase her customers and productivity at the same time. Now, as we speak, Mary has employed more than 5 people in her business when she started alone by the time she was getting credit from Pezesha. This is really what drives us. This is the purpose of why we're dedicated to make Pezesha infrastructure work. And so is same for the story of Judith, Miriam, and John, who are just some of the SMEs that we have supported and impacted And this is really where our success comes from. The more SMEs we support who are providing essential services during COVID is really the way we define our success. Our solution that we have built aligns with the AFI themes, as stated on the left. We have so far impacted more than 20,000 youthful SMEs with capital across all sectors. And these SMEs include youth and women. 80% of our customers are youth, 60% are women. We have been able to measure from our data that we have created more than 1,000 formal jobs and 5,000 informal jobs that we continue to track. More than ever during this period, we continue to support small businesses throughout the COVID period. We have provided them with float financing, access to digital tools through our collaborations with partners like Google. We have given them programs to reduce the debt burden and over-indebtedness. We have become their voice in the conversations of private and public sector, where we are actually helping them to be able to get access to stimuli packages. As now, as we speak, some of our SMEs are already getting some of the services from government in Kenya just because of us presenting them in those discussions. More than ever, we have made it our responsibility to have financial education, to educate them on how they can continue to increase cash flow and have safety measures to get their business to the next level. In summary, what we are just trying to do during this period as a business is to help SMEs to survive, to reset, and to thrive. In beyond giving them access to working capital, beyond giving them access to digital tools where they can grow their credit scores and financial education, we've also partnered with development partners such as MasterCard, UNCDF in Ghana, to be able to roll out resilient programs where we are now targeting the completely marginalized and underserved communities like gender-based violent women, youth, and personalized with disabilities. And now we have rolled out the Pezesha infrastructure to disburse interest-free loans to these particular communities to be able to survive during the COVID period. So I'm asking you today, ladies and gentlemen, to join me and some of the corporate partners that have already joined us in this period of COVID to take us to the next level of impacting 50,000 small businesses across Africa. These corporate partners are working with us as either SME partners where they're bringing quality businesses. On the other hand, bringing affordable liquidity that we can take to scale and bring resilience to these businesses. And guess what that's gonna do to our business? It's gonna lead us to profitability and scale at the same time. Why are these corporate partners working with us? We have built an infrastructure that has been validated and proven with a proprietary credit scoring solution, which has a unified source of truth. We pull data from different sources with the consent of the customer. We have recently gotten the Capital Markets Authority approval that actually strengthens our trust and credibility and scale in the market. Our domain expertise in supply chain financing allows us to then ensure that the money we lend is productive and used in a responsible manner. On top of that, we have layered value-add services such as financial education and digital tools to allow these businesses to continue to build their credit history where banks will not be able to service them. As you know, as I've already said, we recently were the first FinTech company in Kenya to be successfully awarded the approval from the Capital Markets Authority as we exited the sandbox successfully. It took us 12 months to exit and test our infrastructure to provide SME debt notes as an alternative asset class. What this approval has done and why we are excited today, it has brought trust to build more innovative products. It has given us a very strong foundation to continue to work with banks who are regulated, and before they were not willing to collaborate with us, but now they are because of this approval. We have continued to highlight our commitment to work with other stakeholders who are helping us to deepen the capital markets. And the same applies that the fact that they're helping us to now deepen the traction we've had so far. Since we started in 2017, we have already funded more than 75,000 loans. We have educated more than 200,000 SMEs. We have disbursed in Kenya more than $2 million. And now, with our partners, we are scaling in Ghana and Kenya to tap into the opportunity of the financial gap that exists. This has been possible because of the team that we have. More than 10 years of relevant experiences in the local markets. Myself, I'm a second-time FinTech entrepreneur. I successfully exited my first FinTech company. And now we're on to a bigger journey to impact more businesses across Africa with my team that brings relevant experience in data, credit, and building lending infrastructures at scale. To finalize, ladies and gentlemen, I'm asking you to join me today. This is my ask to you today. To join me in having a dialogue to enhance digital financial inclusion to another level. A dialogue of private and public sector where we can converge to talk about how can we bring regional policies at an harmonization level where fintechs can be able to create another level of success where banks and other traditional lenders have not been able to reach. Open banking regulation. How can we design policies and frameworks that return control back to the consumer and lowering the barrier to entry? And lastly, financial education, which we have made it to be a responsibility in what we do as a value add. How can we make it a national agenda? And so I'm encouraging you to join us in this dialogue because this is the future. And the future is already here with us. So please join us because our platform presents a cross-level playground, which is mobile-driven to allow everyone to be included. And that's why I'm asking you to join us in that dialogue to make it possible now because the future is already here with us. Thank you.
Thank you so much, Hilda. That was a very interesting presentation. Thank you so much for sharing with us. At this point, I would like to invite the judges to please have the floor and ask Hilda any questions they have. Also, a quick note to the audience, please do feel free to type in any questions you might have for Hilda using the chat function. Thank you. So if I may, Ernesto, do you have any questions for Hilda?
Yes, thank you. My question is, can you tell us a little bit more about your growth strategy in the future?
Yeah, so absolutely happy to do that. So as I said, we have already partnered with, strategic organizations and corporates who are helping us to grow and scale, in this market where we are in Kenya. But beyond these partners, we are already involving these SMEs with other products. And we are working with even mobile network operators, like in Nigeria, we've collaborated with MTN, where we have been able to penetrate to their agent network and working with the small businesses that they are currently empowering through the agent network of MTN. We've also, gone beyond partnerships and made it upon us to go to the association. So for example, in Kenya, we're in the process of partnering with payment providers. We're also in the process of partnering with associations, SME association networks, the Kenya Manufacturers Association, for example, that has already been part of creating these networks. And so we have gotten very good feedback already in the process of enabling these businesses. Beyond that, we have gone to the Kenyan or African ecosystem, what we call the social networks, the chamas. And each African country has a lot of those corporations. And so we've tapped into those existing informal social networks. Every country in Africa has those social networks by name. And so we've gone through them to tap into informal small businesses. And they are helping us and becoming our champions on the ground to access these businesses. So we do believe through that agenda of working with corporations as our aggregator for small businesses, working with other partners, and even ourselves, using financial education as our route to acquisition has really shown that is effective. Now it's just a matter of scaling that to other African countries and, of course, where we are currently in Kenya. Thank you.
Thank you, Hilda. And I have another question. You mentioned about crowdfunding models. How do you think the growth of these models can affect your already model? Is not just like maybe like the same purpose, and maybe I don't know if the growth of the crowdfunding model affect you as a business.
Yeah, I think that's a very good question, because part of the approval that we got from the Capital Markets Authority was crowdfunding. So we've fully tested that model. And we are very excited that the regulator was backing us to actually test that particular model. And so the way we've built our infrastructure is to say, whatever model can be contextual to the different markets, then it applies. And so crowdfunding became very relevant, especially now more than ever during the COVID period. And so we went back to the regulator and said, can we test this model? And we have tested it and it has worked. So we don't think, in fact, it has a way to propel our infrastructure, because now more than ever, we have seen it being used in Ghana, for example, where we're working with UNCDF. We have seen it being used to actually reach to the underserved SMEs in the Ashanti and Western region, to actually access credit, where we have brought in the diaspora community to actually fund these businesses. So we're doing it in a very pragmatic manner, but also to educate the lenders or the investors on what the risk really entails. So this is something that we see is going to be part of our key in how we scale in some of the countries that we tap into across Africa.
Great. Thank you.
Thank you very much, Ernesto. Before I go back to the judges, I would like to take a few questions from the floor. So we have a question from Roberta for you, Hilda. So basically this follows up with what Ernesto asked, and some of our questions are, what are the current default rates for the loans you've issued? And what is the average interest rate for the current loans you have, excluding the interest-free ones? And she also wants to understand if you need a banking license to operate, and how do you use private debt to fund your infrastructure? And again, can individuals participate in the crowdfunding with institutional investors and high net worth individuals? So those are the questions from Roberta.
Wow, those are 10 questions in one. I'll try and answer all of them. Please let me know if there's anything I'm missing. So because we've taken a very productive approach in the way we do lending, as I said, if you look at the slide in front of me, we're working with suppliers. And so what that really means is our credit is non-cash. We literally just give the money to the supplier, the merchant buys the product, they don't get the cash. And so we make sure that this money is used for the right purpose. And that has really helped us to reduce the risk. And so everything is happening at the source. You know, the money is being dispersed to the supplier, collection is happening at source, and all the things that we do is really to mitigate the risk. And so we've so far proven that this model works. We have a default rate of less than 2%, which is really impressive compared to what we're seeing in the market with the digital lenders at 30%. You know, take it or leave it. And so we're very excited that because of the hard work we've done in the last 3 years to build this infrastructure, we've been able to validate that really making it productive really reduces the default rate and the risk for our lenders on the other side of the marketplace. The interest rate, as I mentioned, we're charging 5% on average. This is per annum. And we are working with SMEs from various sectors, agriculture to SMEs in FMCG sector, manufacturing, and many others. And so we want to make it so affordable that they can also be able to pay and continue to come back, to use this credit to grow their inventory. So for us, this is where we believe, as long as we can make it affordable, it's definitely going to create that, shared economy and effect where we can continue to grow these businesses and everyone benefits in the value chain. We don't need a banking license because we don't do deposit taking. The money that the lenders give on our platform sits with a bank. We've partnered with a bank, and that is why we went also through the sandbox. And so we've partnered with a bank that actually does all our deposit taking, and we have APIs that we've integrated. And that's why I'm encouraging open banking regulation as a conversation and dialogue within the AFI network. And so what we've done is we have already proven that with the bank we're working with. And so everything is API driven, and Pezesha the only thing that Pezesha does is enable, those funds to be remitted through APIs to the different wallets that then, the merchant can be able to access or credit that to the wallet of the merchant to be able to access the inventory that they need. So we don't need a banking license. We're pretty much a technology platform. We're an enabler. We're not a deposit taking entity, and we work with banks to facilitate our deposit taking. We have high net worth individuals who are part of our platform. The diaspora community has already been a very huge value word in terms of the capital that we have on our platform. The local investors have also participated. 81% of the money that we've dispersed on Pezesha platform comes from local investors, which already can confirm that truly, if we can be able to deepen the local capital markets, then we can empower more small businesses. And so we are actually diversifying to other investors, including cooperatives and SACCOs and the diaspora communities that have shown interest to support their local communities as we continue to scale. Thank you.
Thank you so much, Hilda, for that answer. I would like to invite Nadezhda or Leah if you have any questions for Hilda.
Yes, I've got a very quick question. I just want to say congratulations on being the first to exit the sandbox. That's really impressive. I was wondering if there is anything else about your business model that you had to change significantly in order to graduate from that program.
No, that's a good question. We didn't have to change our business model. I think the key thing was just to tighten it. And so we've had to really think about, how do we then get this model to scale? So the good thing is, or the good news is, we haven't had to change our business model. We've had to think about, how do we then scale this model in other areas that we might not be able to reach, which is now why we've worked with partners and associations like the Chamber of Commerce and the Kenya Manufacturers Associations in Kenya. And that was for us one of the biggest things that we kept on asking, even in the sandbox, how can we scale beyond the exit? And so we've just had to really look at what works in a contextual manner to acquire those businesses, credit score them, and really bring them back to the marketplace. And so, we have the full blessings to roll out our model. And now we're just layering it on top with other models that we can see that are contextual in other markets like Ghana. And in Kenya, this is just a scale conversation. And the regulator is already saying, look, go and work with other people to then continue to scale this model.
And just one more from me, if you don't mind. I was wondering if you see it being applicable to any other markets globally, and what would be the challenges for your business in terms of implementing that and tailoring it to new markets?
Yeah, thank you. And so we're already seeing this model applicable in the countries we're currently scaling, which is Ghana and Nigeria, where they have also been a bit ahead of us in terms of rolling out, this kind of, crowdfunding and frameworks and really thinking about, the FinTech regulation. And I think Ghana has already shown they are way ahead in that. And so we're very excited about that. So we've gotten a lot of support from the regulators in those countries to just implement the same. I think, back to my last comment of collaboration with the dialogue in the conversation with this network is how we can harmonize. And I think that's going to be one of our key challenges and a conversation that I want to have with the AFI network on how can we harmonize and provide ideas, for example, with the lessons we've learned in the Sandbox program. Can we help other African countries to take those lessons and actually implement them? We've already seen other countries already rolling out crowdfunding frameworks. And so, others are really lagging behind, but then there's a lot of lessons. And so I think one of the challenges we're going to have, even globally, is harmonization of those policies and frameworks. And I think this is a dialogue we can have to then say, is there a particular blueprint we can use to say, let's harmonize from a regional level and let's harmonize from a global level. And if we can be able to do that, then Pezesha definitely is going to go over and beyond borders to scale beyond Africa.
Excellent, thank you.
Thank you so much, Leah. Nadezhda, before I come to you, some quick questions from the floor for you, Ilda. So we have Rashid from the Central Bank of Uzbekistan asking what kind of approaches or methods are made available through you to reach the population in rural areas. So basically, how do you reach rural areas? I think you've touched on the question from Josephat on how you're regulated in the markets you serve. But there's another question from Hehab who is asking, is there any form of guarantee or do you have a reserve fund for possible defaults? Basically, so how do you protect the interest of the funders and those who provide the reserves for you? So basically, those are the questions from the floor. If you can just address them in a few minutes.
Okay, thank you. Thank you very much. So we've been able to reach the rural again through our associations. We work with cooperatives. As you know, the African economy is really, the informal economy is really these cooperatives that are driving it. So we currently have more than 100 of those cooperatives that we're collaborating with. And they've helped us to penetrate the rural markets. They have already built this network. We don't need to reinvent. We're just tapping into that network. Our business is about the network effect. And so we've really just made that to be an effortless approach by collaborations. And so that is one of the quickest way we've reached through the rural communities without, having to struggle too much of putting our own effort and investment. The second way, of course, is the technologies we've deployed. Our infrastructure is cross-platform. From SMS, a simple, cooperative member can be able to access SMS financial education from us to get tips on how they can grow their credit score. Once they graduate, then we empower them with digital tools, free digital tools, where they can now be able to start getting access to credit. It's a process. And so we've made that to be very pragmatic. The credit is really just a byproduct for us, where we want these businesses to really think about responsible and meaningful inclusion at the end of the day. And so, we've also made that intentional decision by the technologies we've deployed through SMS and, these businesses who have featured phones in the rural sectors can be able to access our financial education modules. And then over time, their cooperative onboards them to access credit on behalf of the agents on the ground. So the agents can apply for credit on behalf of a member who has qualified to go to the next level. In terms of guarantee, we have already partnered with development collaborations that are actually providing guarantee programs to our lenders. And some of those institutions are actually looking to ensure that we can grow capital on our platform, but also we work with sophisticated lenders. So they are educated on the risk from day one. And that was also part of what we tested in the Capital Markets Authority Sandbox. We educate them on the risk. We help them understand the risk, and also we take them through that program until the end. And the guarantee is just, another layer if they choose to take it or not, after they have been educated on the risk. And so we have it available, but again, we also have other security measures beyond the guarantee. We have already, we have collection at source. So every time the merchant doesn't pay, the money is credited to our wallet and we pay the lender directly. So there's a lot of mechanisms we've put in place and levers to ensure we reduce the risk of the lenders, notwithstanding the fact that we've continuously evolved our credit scoring algorithms to reduce that risk. And so we do everything that is possible within our control to reduce that risk as we continue to educate the lender, but we have partners who are already supporting with programs like the guarantee and insurance and security measures to ensure that lenders' risk is completely reduced. Thank you.
Thank you very much, Hilda. So one final note to Nadezhda, if you have any questions for Hilda.
No, thank you very much. I would like to congratulate the team. It is amazing work and amazing project, and it was very pleasant for me to find out that the crowdfunding is in use because by the MSMEs, because for example, bearing in mind our domestic circumstances, it is the most underestimated instrument in Russia, for example. So congratulations once again.
Thank you. And we've actually now just, we're very excited to have rolled that crowdfunding model in Ghana successfully with UNCDF support, rolling out the same program. We have now, empowered so many underserved businesses through that model. And I think this is a model that is needed more than ever during this period to support SMEs to reset and thrive in the long term.
Thank you very much, Hilda. Thank you to the judges and to the audience. And congratulations, Hilda, for the excellent presentation.